Hey everyone, welcome back to Corporate Decoder. Today we're diving into Cosmos Energy's latest 10K filing. I know, a 10K sounds about as exciting as watching paint dry, but trust me, there's always a story hidden in these reports. This time, it's a tale of deepwater adventures, energy transitions, and a little bit of financial tightrope walking, so buckle up. First off, what exactly does Cosmos Energy do? They're like treasure hunters of the deep sea, searching for oil and gas in places like Ghana, Equatorial Guinea, and the Gulf of America. They've had some big wins in the past, opening up entirely new areas for energy production, and now they're focused on getting even more out of their existing fields. Their strategy is a mix of squeezing every last drop from their current wells, developing new projects they've already discovered, and snatching up new opportunities when they see a good deal. It's like they're trying to be both reliable producers and opportunistic entrepreneurs at the same time. Now, Cosmos isn't just drilling and hoping for the best. They've got a three-pronged strategy. 1, they want to get the most value out of what they already have. 2, they want to turn their discoveries into actual production and cash flow. And 3, they want to find new, cleaner energy sources. They're talking about reducing carbon emissions, eliminating flaring, which is the burning off of excess natural gas, and being good neighbors in the countries where they operate. It's all about growing that cash flow, proved reserves, and production, with an increasing emphasis on natural gas and LNG, or liquefied natural gas. They're planning more drilling in Ghana, continuing development in the Gulf of Mexico, and are excited about their Greater Tortue Ahmeyim project, which is a big natural gas field shared by Mauritania and Senegal, and actually achieved first gas in late 2024. Looking at their properties, we can see they have interests in a number of deepwater fields. In Ghana, there's Jubilee and 10, operated by Tullow. In the Gulf of Mexico, they operate some fields themselves, like Odd Job and South Santa Cruz, and are partnered with others on fields like Kodiak and Winterfell. The Greater Tortue Ahmeyim, operated by BP, is a major project for them in Mauritania and Senegal. First LNG was achieved in February 2025. Now for the numbers. As of the end of 2024, they estimate total proved reserves of 251 million barrels of oil equivalent. That's a pretty significant amount of energy. Of that, 90 million barrels are considered proved developed, meaning they can be extracted using existing wells and facilities. Cosmos is focusing on finding more oil and gas near existing infrastructure. That way, they can bring new discoveries online faster and cheaper. That's what they call infrastructure-led exploration. Think of it like adding a new room onto your house instead of building a whole new one. But like any good adventure story, there are risks. Cosmos lays them all out, from the volatility of oil prices to the challenges of operating in politically sensitive regions. They're also worried about the impact of climate change and the increasing pressure to move towards cleaner energy sources. Let's take a look at what some of these are. Yes, the risk factors section, every company's confessional booth. Cosmos isn't shy about admitting the things that could go wrong, from political instability in Africa and the Gulf of Mexico, to the ever-present threat of bad weather in the Gulf. And of course, the big one, the volatility of oil prices. If prices tank, it could throw their entire business plan into disarray. This makes it hard to borrow and maintain a good level of growth. Operational risks in the oil and natural gas fields, especially with offshore projects, is also concerning, as accidents can happen that cause financial distress to the company if not insured properly. They're not ignoring cybersecurity either, which is a smart move considering how much the energy industry relies on technology these days. Overall, it's a pretty sobering list, but it's good to see they're aware of the potential pitfalls. One number that's often key to understanding a company is their liquidity. Right now, they're showing around $535 million in liquidity. That means that if they needed to, they could reasonably get around $500 million in ready cash, whether that was actual cash on hand or assets that could be quickly converted. Let's peek at the financials to really tell the story. In 2024, their sales volume was 23.5 million barrels of oil equivalent, with an average sales price of $71.27 per barrel of oil equivalent. Revenues came in at just over $1.67 billion. However, in their words, the company's cash flows from operations, profitability, and liquidity could be materially impacted if these factors are affected. The company does do active commodity hedging and reviews their capital spending regularly. Another number to take note of is their general and administrative costs, about $100 million, which is just a little under the previous year. That's about all there is. There were no further disclosures. Now to the last part, final thoughts. Cosmos Energy has a relatively streamlined strategy, but it can't be denied that their profits and growth depends heavily on forces completely out of their control. What if their exploration efforts don't pay off? What if environmental regulations get even tougher? What if there is a global market slowdown that makes everything cost more while prices go down? If the global economy improves and there are no major adverse events, then this company is in a strong position to grow and profit greatly. However, the opposite is equally true. Thanks for watching. If you enjoyed, please subscribe, like, and comment. I'll see you next time for another corporate decoder.